Hi, everyone. I'm Megan Finnerty, and I am so happy you're here on Coronavirus Conversations. I'm with the USA Today Network, and I'm your host right here, as usual, from my house in Phoenix. This is our weekly show because we know facts fight fear, and we're here to connect you with the work of our network of more than 5,000 journalists from across the country to answer your key questions and keep you informed. Our mission is to help you, not to scare you or be weird and talk over each other. Today, I'm excited to introduce you to our colleagues and our guests because we're here to talk about how to maximize the resources your family has and how to make sure you're taking advantage of any of the opportunities out there with other businesses as they support you. Today, we are going to hear from Brett Molina. He's the Money Now coordinator. He's going to talk about car insurance rebates. Jessica Menton and Charisse Jones. They're both money reporters at USA Today. They're going to talk to us about mortgage help and rent relief. Aaron Lowry from Broke Millennial is here to talk about saving for like an emergency fund, obviously right now feeling pressing, versus paying down debt, whether high interest or otherwise. And we'll hear from Michael Thatcher. He's the president and CEO of Charity Navigator on how to maximize your donations right now, because if you have resources, now would be a good time to share them. We're going to get started right now, though, with Charisse and Jessica. We're going to talk about rent and mortgages. Thank you so much for being on today. So the first thing we want to know is, I know we've covered this before, and the point of today's show is really helping to remind people about, I know it can feel overwhelming, right? When you are in a sense of panic or scarcity about like, wait, I need to make a plan. I need to calm down, take control of my finances. So we're going to start with, if you have a mortgage, where to begin, Jessica?
Right. So if you have suffered any sort of financial hardship, unfortunately, if you've been laid off or been furloughed due to the coronavirus crisis, the biggest step you can take is to call your bank, because with the CARES Act, it really gives homeowners two different types of relief options. And the first big thing is, if you have a federally backed loan, it prevents lenders from beginning any sort of foreclosure process on that if for at least 60 days after March 18th. And keep in mind, we are already in May, so that is coming up in the middle of this month. But the second big thing is that if you are a homeowner and you've experienced that kind of hardship from the pandemic, you can request forbearance for up to 180 days. And then if you still have a hardship after that, you can still request it up to an additional 6 months after that. So you really have a year's worth of relief of forbearance that you can get. And a lot of people might not know that. And I think the biggest takeaway is this is for federally backed loans. So you really need to keep in mind, do you have a federally backed loan, or is this backed through the bank? And so those are the typical things that have confused a lot of homeowners right now.
So it sounds like there are a lot of options and that we can negotiate. I think, that feels intimidating probably to a lot of people, but you're saying like get on the phone and hang in there with people, that there could be any number of loan modifications available to you.
So there are a number of options. And I think the biggest thing from the CARES Act, it left this loophole where the law doesn't necessarily specify what happens after the forbearance period ends. And so a lot of different banks have warned different borrowers that they might be having to force them to pay a lump sum, as far as, say, if you got a 3-month reprieve, and if after the 90 days comes up, you might have to pay that lump sum on day 91. But the CFPB has come out and said that's not the case. If you have a federally backed loan, you can still ask for either more forbearance, or you could do a loan modification process. So depending on what your income level is, and say if you were furloughed and you did go back to work, you could work with them as far as extending that loan, putting those on the back end of the loan. But it is a little bit different. You could do that with federally backed loans. That might not necessarily work if your servicer owns your loan, say if you directly have that loan through Chase or Wells Fargo. So if you do run up into those issues, the CFPB said if you feel like you aren't getting the type of relief that you really need, you can file a complaint with them and they'll follow up.
Oh, can you, CFPB, for all of our people who aren't like hip to the lingo, what is that short for?
The Consumer Financial Protection Bureau. So basically, They have a number of options where you can file a complaint with them if you feel like you aren't getting those types of relief, or if you feel like your bank isn't helping you enough. And if you are, say, you do have a private loan, that might work for you because you don't exactly have the same kind of rights with the CARES Act as you would. So they're also, through the CFPB, they have on their website different housing counselors that are through the Department of Housing Urban Development that could also discuss options with you if you're having trouble having to pay your mortgage and you feel like you need some sort of counselor there that could help you negotiate with your lender. If you feel like they're forcing you to have a payment option that you feel like you really can't pay. So you should really go through the CFPB's website and see what kind of options of help that you have. They even have, hopefully it doesn't get to this situation, but if you need any sort of lawyer or something like that, they have a local bar association website that you can work with, or legal aid.
Oh my gosh, Jessica, there's so many facts there. Thank you so much. That was a really comprehensive answer. I'm going to go to Charisse. So many Americans rent. And so the idea of like having a mortgage, like great, good for you, you bought a house. But for most people, a lot of Americans are renting. And there has been, I think, a lot of confusion around the way the CARES Act can help protect renters. So first of all, start there. It offers some relief. What does that look like?
Yeah, so the Federal CARES Act has a lot of housing assistance in the billions of dollars, and some of that is designated for tenants who live in federally subsidized housing, a housing project, or they have a voucher for an affordable unit, or if you live in a building that has a private federally backed mortgage. And basically it says that you cannot be evicted during this crisis period. And of course, you don't necessarily know if you live in a building that has that kind of a loan or mortgage. So there are some resources, some tools you can access to find out if your property is protected. The National Low Income Housing Coalition, for instance, you can go to their website, they have a tool, you can look up your property and find out. But there is help so that you don't get kicked out onto the street because of what's going on right now in the country.
Okay, so that's reassuring. You also mentioned, as we're showing here, you can find out whether or not your community has an eviction moratorium. So talk to us about like how those are structured and what that means.
Yeah, so more than half the states and more than 100 cities have a moratorium on evictions. And it's very important to understand that that is not a rent freeze or rent cancellation. So you might still be on the hook for late fees and for those payments once this period is over. You just can't be kicked out. So you can do a Google search and see what's happening in your city or in your state to find out if that's in place. There are charities that are local that might be able to help you figure out where you stand with that. But again, you have to remember that it just means you can't be evicted, but it's not going to help you in the end when you have to make up those payments.
Okay, that's good to know. And I mean, again, these things we are just trying to provide resources and support to everybody watching to say like, hey, we know these are kind of like anxiety provoking times. And when you get a minute to yourself, like you can sit down and say like, hey, I can take control of some of these things. And Charisse, I really appreciate you talking about that. You also mentioned advocacy.org can help you find some of the resources you need.
Yeah, so the Urban Institute has found about 43 programs across the country at least that are helping people to get rental assistance. And again, the National Low Income Housing Coalition has a resource page on its site. You can go to Google and just look up and see what local charities are doing. But basically that can give you that financial bridge that a lot of people need. Because again, if they're not evicted, they may still owe back rent and they're going to need some financial assistance in order to cover that. They vary. I mean, sometimes the payment goes right to your landlord. Sometimes it goes to the tenant. You may have to prove you lost your job. There might be an income gap or a limit that you have to meet. But there is help out there, and there are places that you can go to find out what local organizations are offering. Some cities are doing it, LA and Boston, for instance. So there is assistance if you need that financial lifeline.
Awesome. Charisse, thank you so much. Now I'd like to chat with both of you guys. We were discussing the future of home ownership might look different because of the ways coronavirus is impacting cities. And so Jessica, you were talking about people right now are saying that in some of our most densely packed cities, people might be choosing to live somewhere else.
Exactly. So I did a story in recent days that took a look at how a third of Americans are looking to leave urban areas for suburban ones. And I talked to a number of realtors over the country. And there was one in Connecticut that said after this happened, she started getting a lot of different clients from New York that typically worked in the financial services industry. And they were going there. At first, it seemed like it was a month-to-month thing. Then it slowly extended to more, well, maybe we should look at summer homes. And now they're looking to stay there for a year. So I think economists are still struggling to figure out, and it might be too early to really tell if this will be some sort of permanent trend where we see people sort of fleeing these urban cities for suburban ones, but it is something that could potentially be a trend later down the line. And there was a realtor in New York City that was pretty dead fast on saying that he still thought even though people were leaving, he thought that they could still be replaced by people because, like we knew with after 9/11, in the last financial crisis, in the blackout, in Hurricane Sandy, that wasn't the case even when people were betting against the city. But I think with this situation, it is a bit different because it is a health crisis. So I think what they were saying is, what does the future look like for these big urban cities in the midst of this pandemic and the wake after that? So I think that's a big question mark that we still don't know for sure right now, but we are beginning to see that trend where people are going to more suburban areas now.
That's interesting. Thank you for that. Sharice, you were saying, obviously, the way we're buying houses right now has totally changed, right? People are doing virtual tours.
Exactly. Real estate, they're trying to really tap into technology, right? So you don't want to go into a stranger's house. They don't want you in the house. So you can look at these properties online. Real estate agents might meet you at the home, and instead of having a lot of folks trooping through, it's one-on-one, you socially distance, they wipe off the doorknobs and the guardrails and the banisters to make sure that you're not, leaving behind germs and people are getting infected. Folks are also signing off on documents remotely. That's increasingly gaining speed. So instead of having a notary in person or an appraiser that has a document you have to sign, you can do that on your laptop or your smartphone. And so these are trends that we're already picking up, but I think given what's happening with the pandemic, these might be changes that are going to be here for the indefinite future.
I think it's so interesting. I know also we're talking about how it's kind of a good time to buy. And it seems like one of the things influencing that, I know in some states, they're saying that before you can make an appointment to tour a house, you have to be pre-qualified for the loan. You have to demonstrate that you can afford that house. You can't just be a looky-loo. Which certainly reduces the number of people who are available to come through your home to look at it. But tell me a little bit more. It's a good time to buy, really? Sort of?
Kind of, sort of.
So I think it also depends on the type of buyer that's there. We've already seen lenders like JP Morgan Chase, they've been tightening their lending standards. So now you need to have a 700 credit score and you need to be able to put 20% down. And so say if you're a first-time home buyer, which is typically debt-straddled millennials that have been paying off a lot of student loans, they've typically, at least when I've spoken to economists, they tend to put down less than 10%. So it might be a bit of a struggle depending on if you're a first-time home buyer and you're in the millennial category and you might not be able to put down that 20% as opposed to someone else that might be able to fit into those categories. So it is great that rates are, again, at historical lows, so you could benefit from that, but there still are some obstacles out there for people.
I mean, 20%. It's hard for a lot of people right now. Well, you guys, thank you so much for being part of this segment. We are going to now, speaking of saving for a down payment, we're going to talk to Erin Lowry of brokemillennial.com. Erin's going to talk with us about whether to save an emergency fund or pay down debt. Because certainly that's a real conversation many of us are having right now. So thank you for being with us. But let's go straight to that question. How do you decide?
I know it feels incredibly overwhelming at first, but to be honest, the very first thing you have to do is you have to face your numbers. And it might sound cliche to say it that way, but you can't make an informed decision until you have all of the facts. And for a lot of us, the number one thing we have to decide is, how stable is my job? What are the odds that I'm going to get furloughed or laid off? And if I do, how likely is it that I'm going to return to a job or return to the same job after this crisis ends? Now, the next thing after you really do a good assessment for yourself is to determine how much runway you actually do currently have in savings. Do you have an emergency savings fund? And if so, how much does it cover for you? Now, I know a lot of times we hear that big, you want to have 6 months worth of 6 months worth of living expenses in an emergency savings. And that sounds like such a big, overwhelming number. Now, one thing I always like to reframe for people is that is a bare essentials living number. It's how much do you need just to get by? How much do you need to keep the lights on, to pay your rent or mortgage, especially thinking about that last segment? How much do you need for food on the table, utilities, etc., transportation, once we are allowed to leave our shelter in place orders? So that's the thing that you need to determine, that number, that amount. Now, once you have that number set, that's when you start to realistically decide, is my money going towards debt or is my money going towards savings, especially for those who are still going to be getting their stimulus checks, for those who might be getting a tax refund, or who might still be working and bringing in money. Now, it was mentioned already in the previous segment that there are a lot of relief programs that do exist, and you want to make sure to reach out to your lenders, your creditors, and get yourself on any of those programs, especially if you've crunched the numbers and it's going to be really tough for you to make all of your payments. Because one thing that I always like to point out right now is we historically have that expression, it's better to ask for forgiveness than permission. Not in this case. In this case, you want to be proactive. You want to be having conversations before a missed payment to see if you can get yourself into any sort of relief program, especially to protect your credit score and credit history during this time.
Oh, that is good. I mean, it's always good advice to give them a call, and because right, people are playing ball because they want your money someday. Like they want you to pay off your credit card at some point. So
They
they're
do.
probably, like they want to make a deal with you, right? Like your money's good at some point. Talk to me about, speaking of credit cards, because we know like so many Americans, their biggest debt loads are credit cards, student medical debt, and student loan debts. So who should pay off their credit card? Like, how do you say like, okay, you're a person who should move the money over there?
Yeah, who is in this category of, yes, this is great for you to still be doing aggressive debt payoff or even a little more than the minimum due debt payoff. Now, the first group I've been calling the unicorns through this process, and those are the people who have stable income, not even a reduction in pay. The likelihood of them being laid off is fairly low or almost non-existent, and they have a very healthy emergency savings. If you're in that demographic, then by all means, keep throwing money and any big lump sums that come in directly towards debt. Especially right now, if you have federal student loans and they're at 0% and they're on forbearance until September, it's a great time to have a lot of money going towards the principal balance owed. Although I still highly recommend you attack the highest interest rate debt first. So that's really the first group. Now, the other thing is if you're in a fairly stable situation and you feel very comfortable with the likelihood of keeping your job and you have a healthy emergency savings, you can certainly still consider putting some money towards your debt as well. But right now, I really like this idea of cash preservation simply because I think it's helpful to consider we all could be losing our jobs. And I know that that sounds like almost a horrible thing to say, but if you operate from that mentality, then you're going to be playing it safe. And hey, as this crisis starts to resolve, if you have a lump sum in savings, at that point, once things are more secure, you can just make a lump sum payment towards your debt.
I think that seems like great advice. And I know you were saying don't be nervous because for a lot of people, 6 months of expenses seems like an amount like, why would you even bother saving for it? Like, and I know you were saying like, you just can't let yourself think that way.
I know it does feel very overwhelming, that 6 months number, and it can take years to reach that goal. So I do think that it's really helpful for us to mentally reposition to this idea of the bare minimum that we want in an emergency savings fund is 1 month of essential expenses. So I know sometimes you hear that rule of thumb of $1,000. That's an old, outdated rule of thumb at this point. That's a good stepping stone on the way to 1 month of minimum monthly expenses, but that's really the bare minimum that you want, even if you're paying off debt in your emergency savings fund. And then after you hit that metric, you do want to keep working towards that ultimate goal of 3 months and then 6 months in your emergency savings fund. And you also need to be a bit self-reflective of what makes me comfortable, what sounds good to me. I'm somebody who is self-employed with a volatile income. So even in a moment like this, 6 months might not feel like enough anymore. I might even be more conservative after this pandemic.
True that. Erin, we're wrapping. We have a couple more minutes left for this section, but I did want to ask: does it have to be a choice? Because I know most people, it can feel hard to make a choice right now when we are in a kind of anxious place. So I know you're saying, well, you can do a little both.
You can. I do think that a lot of times we like to look at most money things, especially personal finance, in this black or white. And you really can do a little bit of both. If what feels good to you right now is to put some money towards high interest rate debt and to put some money in savings as opposed to all towards one or all towards the other, that's okay too. Just do make sure that the numbers are informing your decision. One of the quotes in the article I wrote that I really loved is that you can't get a refund on your debt payment. So before you make any of those big choices, just make sure you really examine the numbers for yourself and that you're making a move that isn't purely emotional and that is at least somewhat dictated by what makes sense for you financially.
Awesome. Erin, thank you so much for walking us through these decision makings. I appreciate it. We are now going to talk to Brent Molina, who's going to tell us about the ways car insurance policy has rapidly changed, because there's actually a lot of good news here, right, Brent?
Yeah, exactly. One of the big moves that we've seen auto insurance companies make is giving back a portion of premiums to their customers. A big reason driving this is the fact that we're just driving so much less now as more people work from home and telecommute due to the coronavirus pandemic, and as offices encourage this, we're on the road a lot less. One statistic that AAA gave out was the number of number of calls for roadside assistance were down more than 22%, which is the lowest they've had in about 5 years. So it's one sign of just how less we're driving. And as a result, auto insurance companies are seeing far fewer claims. Obviously, the less we're driving, the less likelihood that we'd get in an accident. And as a result of that, a lot of the insurers are looking at it as an opportunity to give back to their customers, which is why a lot of them might be seeing on their bills a reduced price in their policy.
There is a lot there. You're also saying that insurance companies understand that financial hardship is real, because what we covered in the other sections, like people are calling, they're playing ball. Help us get into exactly who is offering refunds and credits. It's quite a list.
Yes, a lot of the top insurers across the country are offering discounts right now, including Allstate, State Farm, Progressive, Geico. A lot of the top insurers across the country have been offering some form, and a lot of that will vary depending on who your insurer is. The range that I'm seeing is between 15 to 25% off of your premium. And also the timing in which you might see that varies. Some insurers have already offered those discounts, so a lot of their customers might be seeing those benefits right now. Others might be seeing it as early as June. So it really just varies depending on your insurance company. The best thing you can do is, if you're not sure, just give them a call and they can confirm for you whether you will get some sort of discount. But it looks like for a lot of customers, they should see a lot of those benefits applied automatically. So you don't have to fill out a form or register for anything to get that. It's automatically done. But it never hurts to call and just confirm kind of what to expect and how much you might be getting back.
And you were saying that generally you should see these things by the end of the month if you do qualify.
Yeah, for many companies, it's the end of the month or even earlier than that. And then in other cases, it might be closer toward June.
Awesome. So this sounds like a little bit of good news where like we can call to confirm, but otherwise you should just be able to like check your bank statement or like check your email and probably have gotten a little bit of good news from your car insurance, right?
Absolutely. Yeah. Just check your insurance policy and your bill for your insurance, and it should spell out pretty clearly whether you were able to get some of your premium back.
Awesome. Brent, I have one more question for you. We were talking about whether or not this is going to be a permanent change, because for so many of us, how far we drive to work, as well as the car we drive and the neighborhood we live in, those are some of the factors that go into how much we pay for our car insurance. And I know, at least at our company, they've said, well, you can plan to be working from home for several more months. So do you see this as being like an even bigger factor in how we get car insurance in the future?
Well, I think it's going to be something that a lot of people will want to think about as they update their insurance policy. When it comes time to renew, if you find yourself in a position where you're going to be working from home a lot more often, that could potentially factor into you getting a policy that is more cost effective and is going to save you some money. It's one of several factors that a lot of the insurance companies use to determine just how much your rate's going to be. And if you know for certain, because you're telecommuting from home now and you feel like that's something you're going to be doing in the next 6 months to a year or beyond, it might be a good time to revisit your insurance policy and talk with your insurer to find out if there's an opportunity there to lower your rate.
That is great advice, Brent. Thank you so much for that. And remember, if you're watching right now live, feel free to share this show with anybody that you know who's trying to maximize their dollars, anybody who you know needs to be reminded to call their bank, call their insurance company. We've got a lot of reminders in today's show, but we're going to now close our show by thinking about others. We're here to talk with Michael Thatcher. He's the president and chief executive of charitynavigator.org. And Charity Navigator is a website that helps you figure out whether or not a charity is legit or a secret front. I'm kidding. But it's an excellent website. It's been around for a long time, and they help you navigate how to use your money wisely to help others. So Michael, thank you so much for being with us.
Thanks for having me, Megan.
So we know, I do want to have a little caveat for our viewers real quick. We understand and accept that to maximize your dollars, it's actually true that you would probably not most often donate in America, that your pennies per human life saved go the furthest when you donate to a developing nation, or specifically Africa. So I do want our viewers who are watching right now to understand that Michael and I understand that. And we are not discouraging international donations right now. We are simply having a conversation to address what might feel most urgent to you in your neighborhood and in your community. And with that, Michael, we know that charities are in some trouble right now. A lot of big events have been canceled. People are dropping down their giving. Can you walk us through sort of like what's facing American charities right now?
Sure, thank you. I think, the issue we're facing right now is either an organization is unable to deliver the service that it provides, or it's unable to fundraise, or it's unable to just do the work that they do. We have a large database of all of the US charities at this point, and we ran a survey a little over a week ago. 83% of the organizations surveyed reported financial hardship at this time. And 38% of that are organizations that are going to be feeling that right now between sort of the April-June timeframe. The other thing that we've surfaced in that survey is that about 64% of them are having to cut back on program delivery, whereas at the same time, they have an increased demand for that program. So this puts us in a really sort of bitter spot, because we're doing the work we're doing in the nonprofit sector because we care deeply about one or two specific things. And now we're unable to do that, and we're also hampered by that.
That is sobering.
Yeah, no, examples that I'd give you in terms of the ability to raise funds for nonprofits. If they were having galas, they're not having galas anymore. They're trying to shift to a virtual gala. The other issue would be something around whether or not you ran events, your services is actually human to human related. You can't do that anymore.
It's much harder. And I know that volunteers, we've been hearing, normally people are obviously like giving with their time if they can't give with their money, but right now that could feel very frightening for people. So thank you for walking us through some of those issues. I think our biggest question that we hope our viewers are asking themselves right now, though, is what can they do? So walk us through some of the options, like how can we help?
So I think one of the things that I think is important is, if you've been supporting an organization over the last number of years and you love and care for that organization, they still need your support. And assuming they're able to function and do business and they will be around, I would keep supporting them. So stay true to the ones that you love. The other thing is, if you're really wanting to, and you have the resources and you want to do something around the COVID-19 response, you need to find an organization that's doing something that's related to that. There are a lot of
specific, you have a specific guide on your website.
We do. We've created a list of charities focused on COVID-19 that cover medical services, funding local organizations, education and awareness. There's a multitude of different areas. And so the key thing is to get specific in what you want to give to. Mm-hmm. And then find a place where you can actually make that donation. And then what I would do is, you need to come to an organization where you go back to the efficiency question. You want to know that the organization is doing the right thing with your money, and that you're actually getting a good investment return on your donation at this point in time. And organizations should be eager to tell you how they will be making a difference.
And, related to that, it seems like this is I was just literally talking with my girlfriends the other day on a run about, she had set aside some money and she was like, here's where we want to donate. And we were literally discussing like, who in our community do we think is like really doing the Lord's work, basically. And I said, if you don't know who to give to, it seems like right now you would try to give to like sort of people with proven track records, who you, as you mentioned, who you'd previously given to, or who are already showing up in your community, who are basically shovel ready.
I think the key point there is, if you don't know, and sometimes there's a lot of requests for help coming from individuals, coming from people you may know or may not know, you're better off in dealing with a disaster and dealing with an organization that knows how to deal with disasters. The proven track record really does help.
Awesome. Well, I appreciate you chatting with us about this. I'm going to bring on Aaron for just a second too. Michael, if you stay with us. We were talking about it's not just a luxury to be able to give. Aaron, we were talking earlier that many faith communities have this like sort of baked into their way of being a person on the planet is like a certain percentage of your money goes to charity or your time and resources. So Aaron, can you talk to us a little bit about like if we're going to Michael's website and we're trying to figure out like where to donate, how do we figure out how much to give?
I think a big consideration, and to harp on a comment I made earlier, knowing your numbers, you really do have to put on your own financial oxygen mask first before assisting others. It's true on an airplane and it's true when it comes to your finances that you need to make sure you can pay all your bills first. Now, if there's money in excess after that, that's when you can consider how much can I donate. And I think sometimes we get deflated and even demoralized by like, oh, I can only afford $5. But to be honest, that still helps. That's still something. And I do think that that's an important part too. It's not always the amount, but even micro grants or micro donations can make a big difference. And thinking about your time. I know you just said physically we might not be able to be there, but are there other ways that you can be helpful and be active and be supporting charitable causes?
Aaron, thank you for that. Michael, I'm going to go to you and say, Charity Navigator is certainly seeing people pivot. They're seeing charities adapt to this online reality. Are you seeing charities provide people with new online ways of volunteering?
They're beginning to do that, but in some cases that may or may not be possible. You can, in education and in mentoring, there's a lot, if you speak a language or you have certain skills, you can reach out and find organizations where you could actually volunteer your time. And let's say you know something about graphics design or photography. Those are all skill sets that many nonprofits may not have high quality resources for.
That's awesome. That's a really, I love that idea of like ways that we can be useful right now. Both of you, thank you for being on to talk about this. Aaron, I really appreciate, and I would love Michael to speak to before we wrap, the idea of even giving like a little of what you have really matters, like not to be super Catholic about it, but I always think about that story about the woman with 3 coins who gave all she had and the rich people who gave much more, but they had a lot more. And that feels like a very comforting thought right now. Not that we're asking people to give all they have, but Michael, talk to us about like how are people donating? Like every little bit helps, or I mean, how does it work?
Yeah, and I wanted to jump in on this because I think even if you give a small amount, one thing you can do, and assuming you've calculated the budget and you can afford this, if you can give a recurring gift, so you sign up for a monthly gift on your credit card, whatever the amount is, keep it reasonable. But that way the nonprofit actually has that regular income that's coming in. And you're also not writing this one big check all of a sudden. And so I think that's an important thing. To the second part I wanted to answer the second part of your question regarding the are people giving right now? They are. I mean, it's actually the generosity is incredible right now in the moment. And our website alone, we've seen about a 26% increase in traffic this year compared to last year, and just a huge amount of giving that's going on. So people are being generous.
Well, I'm going to leave it on that uplifting note. Michael, and thank you so much for being on the show today to inspire us and help us think about where to give and how to help. I'm going to bring up all of our guests and say thank you guys so much for being on the show today. Aaron, Jessica, Charisse, Brent, Michael, thank you all for being on. And thank you so much for watching. Please share the show and follow us for more on usatoday.com. You can find us more on our Facebook page here. We're also on Instagram. We appreciate you watching. And please remember, today's show is filled with interesting facts and we hope a lot of good advice. So share these recommendations with your friends and family to help them get the most out of their resources. Stay safe.
Hey, thanks for watching. If you like this video, check out these other videos from USA Today to stay up to date with all the latest news.